How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus the US dollar. As you can see here on Thursday, price continues to trend higher. So we're still attacking buy-side liquidity, or in most general sense terms, we're taking out the previous daily high. That's your easiest draw on liquidity day to day. It's either going to be the previous daily high or the previous daily low. Going into this first week so far, into Thursday, price has not taken out a single previous daily low. Price has been protecting the previous daily lows and raiding the previous daily highs, taking out swing highs and also getting back up to our IPTA look back 20-day range high right here. Now, that does not mean at this point price should just automatically reverse. There are a few things that I anticipate, either a retracement, a respect to that level, or we may get a reversal, right? Price may change trend. This might be a Judas swing, a false break above a high, a significant high, and then price changes trend. We are in a premium, so not saying that's out of question, but we need to continue to watch how price progresses and look at all the other majors as well. Look at GU, look at AU, look at NU, look at UCAD, USwissy, look at UJ, look at gold. There needs to be an intermarket analysis. You need to be comprehending what all these pairs are doing to focus on what you can probably get from the pair that you're most likely focused on and tracking to trade. So far, we can see all the pairs cross with the dollar or the majors like GU, AU, EU, NU. We can see they've been bullish. Looking at today, we had a very influential news event, ECB interest rate decisions. So we know the rates are the primary driver to fiat currency. We spoke about that many times. And today that happened during the New York session. So let's take a look at my simple New York session model and how you would have been able to find a long position in this bullish trend. Let's take a look at the 15-minute time frame. Just going to highlight and show all the kill zones. You see we have Asian, we have London, and we have New York. So just before New York session, we have a dead zone, and that dead zone is from 5 a.m. going all the way into 7 a.m. This is what we call the London lunch. You're most likely going to get a phase of consolidation or accumulation. The market is going to build in buy stop orders and sell stop orders. Market might most likely move sideways. So that's why we avoid trading in these dead zones between the kill zones. We're going to be utilizing the liquidity pools in that time period to help us formulate a trade idea in the New York session. So we have here, this is a swing low formation. We're going to mark that off. That's sell side liquidity. Right here as well, we have a swing low formation. That's going to be sell side liquidity. Many people ask, how do you define a swing low? Or how do you define a swing high? We talk about it and show it every time I'm showing some type of video. This is a swing low because there's a higher low on the left and a higher low on the right. That's the lowest candle between 2 points. Simple. Same thing here. It's the lowest candle between 2 points. The low on the right side of this candle is higher, and the low on the left side of this candle is higher. So that makes this the swing low. Everything vice versa for a swing high. So that's a swing high. We'll mark that up. So that's buy side liquidity, and it'll take the highest high of that session here. You could also see there's a swing high just prior, but we'll just take the highest high that starts inside the London lunch session here. At this point, we mark off the opening price for the New York session because that's going to be our natural indication for overbought and oversold. 7 a.m. So when price moves above, overbought. When price moves below, oversold. If we're looking for long conditions, we need two things to happen. We more than likely want to see price drop below 7 a.m. and take out counterparty liquidity pool, meaning since the higher time frame, we've noted off that we are bullish on EU and bearish on dollar. We want to see EU on the lower time frames take out sell side liquidity and run higher. Very simple idea there. So let's see what happens. Price comes up, takes out buy side liquidity. Could there be a short opportunity here? Absolutely. But is that what we're looking for? No. So let's not even get into talking about the details there. We're waiting for what? Counterparty liquidity to be rated. There we go. Swing low broken. There could have been a selling opportunity here, of course, but that's not the main focus of this video that I want you guys to focus on. You can do your homework to see what happens here and see how if you could potentially catch a short here, which you possibly can, but we're looking at the longs. Price takes out the swing low here. So now we're hunting what? long opportunities because sell side has been purged and we're below the 7 a.m. opening price. Let's play it forward. Price even comes down again on these news events. Right here, right there. News event comes in, price drops down. What did they get retail traders to do? Go short. Chase the large candles. Go down on the 1 minute time frame because that's where I like to find my entry. It's not that I'm analyzing all the charts from a 1 minute perspective. I'm really analyzing it from the daily, 15 minute, and then 1 minute. The 1 minute is where I'm looking for my entry to attack. I'm looking for a swing high that is broken by a fair value gap. And that swing high must be inside the fair value gap. Stop. Pay attention to the entry technique. I had many people in the chat asking me, why did I not take this fair value gap or that fair value gap? Because it doesn't look like this. If it doesn't look like this, I'm not taking it. Point blank, period. See how this swing point, 1, 2, 3, it's a swing high because the candle on the left has a lower high. Zoom in. The candle on the right has a lower high. So this is the highest point between these two candles. So that's a swing high formation. There goes the fair value gap through the swing high, and the swing high is inside the actual PD array here. It's not on the start of the fair value gap, and it's not at the end of the fair value gap. We want that swing high to be inside the 2 points here. That's where we'll be looking to go long. That's the entry technique I've been showing you guys for the past couple years now. 15 pips. 15 pips. And we can see even our projection for our take profit brings us up back into the 7 a opening price, so fair value. So that's a good look. And even back up to buy side liquidity pools or old highs. Play it forward. Price taps into it. That's where we're long, and we hold for higher prices. We got that news that comes out. I think the chairman was probably speaking. I'm not sure. And price continues to trend up to where we are currently in price. So there we are. As we can see, we would have been made a substantial amount of profit here, more than 15 pips here. Not saying you have to close your trade out at 15 pips. If you want to keep a runner, keep a runner. You don't have to close the entire position off. Take partials and hold for higher price action. If you believe that the market is going to trade higher within the next couple of hours, within the next couple of days, then try to hold a trailing stop and see if you're lucky enough to not get stopped out. Odds are you get stopped in most conditions, but here we can see price does trade higher. And if you would have had a protective stop below recent swing lows, you would have been able to probably capitalize on a little more than just 15 pips. Price overall gets back to that highest high we had at 5 a.m. right there. Tags it and moves higher. Notice as well, too, as prices continue, hindsight right now currently, but notice how it dropped below 7 a.m. again, retests the level, and then moves higher. Moves all the way back up. Even trades back into some type of PD array and then trades higher. Let's take a look at the DXY. See what the DXY is doing in recent time. Because we can see this is trading higher, 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 and higher. What is the DXY doing at this point in time? Probably doing opposite to what this is doing. It's probably trading what? Down. Let's take a look at the DXY. DXY, selling off. And I asked many folks in the channel, I had put a poll out asking, do you believe dollar is bullish or bearish? Some said that they probably didn't have enough context, which is reasonable. And some said that it was bearish, which is correct. And some said that it was bullish. And I was trying to understand how people were getting to the analysis of a bullish dollar. Granted all the macro information that we have, the seasonal tendencies, and what we are currently seeing in all the majors, UJ, UCAD, USWISSY, EU, AU, GU, NU, and AU, we can see they're all moving in market code. Dollar down, all the dollar crosses are going to go up. We can even see gold has made all-time highs as well. So you could definitely be sure that dollar is bearish. We can even see today dollar creates an inefficiency through a swing low. That's substantial. That is very substantial. So I would like to see if we get a lower swing high for dollar back up into here or even back into this last up close candles and then trade lower. So a lower swing high is due. there's a correction that's due, unless March is just a show where it just keeps selling off. And we can see that sometimes. Price sells off and we don't get any real pullbacks. It's not always going to be picture perfect in the way that we would like it. We need to be reactive in what the market is giving us. If we do get any up close candles, that's an opportunity to go short the next day. Now we could have 2 consecutive up close candles. Those are still 2 opportunities to go short each day after. And then so on and so forth. Vice versa. If we're looking at EU, if we get any down day, buy the next day. If it's going to keep trending higher and you're confident that the market is bullish, those down days are the indication, natural price indicators to tell you that, yo, we had a cheap day, buy tomorrow. It's the same thing with stocks. If you're looking to invest into a stock, let's say Apple, and I'm not talking about current time because everything is just crumbling in the US stocks right now. Let's take Nvidia since it's been hulking up to the upside. If you're looking at Nvidia and you wanted to get a position in, you would wait for a down day and you would buy after any down day. Let's just take a little sidetrack off of that real quick. Not the candidate stuck. There we go. Just looking at Nvidia, it's been hulking since the beginning of 2024 and even then some before that. But just looking at what it's been doing since 2024, look at what happens after all the down candles. It's a clear indication that you should be buying after it. Down candle, look at how price trends away. Down candle, price trends away. Down candle, price trends away. Down candles, up. Down candles, up. Down, up, down, up, down, up. And you guys get the gist. It's a counter trend candle. It's against the trend. So those down days to investors, it's a cheaper day. I can get these shares or I could get these call options at a cheaper price so that I could ride it up higher. If we look at Japanese yen, I know it's mainly about EU, but the intermarket analysis needs to be here. And a lot of people aren't getting the gist of how they should be structuring themselves to tackle certain things. We can see with the IPTA levels of Japanese yen futures, we can see prices continuing to trade higher. We just tap right back into that old 40-day low, and we're most likely going to tap into that old 60-day low too. Price is creating higher swing highs and higher swing lows. So this is a swing high formation. This is another higher swing high formation. This is a higher swing low. Let's take off the annotation so we can see that. It's the swing points. That's a swing high. 1, 2, 3. That's the swing high. Lower high on the left, lower high on the right. This is a swing high. Lower high on the left, lower high on the right. This swing high is higher than this one. So that means there's signs that what? There's buying occurring. We also can see the inverse is occurring. There's higher swing lows. 1, 2, 3. That's a swing low. This is a swing low. This swing low is higher than this one. So there's someone in the marketplace that is pushing Japanese yen higher. They want to see the value increase because you can see structure is giving us higher swing highs and higher swing lows. That's your one-on-one bullish trend or bullish structure. I would anticipate in said point some type of retracement and then price going higher. After any down close candles, we need a higher swing low. That is what is due right now in the marketplace. Price could go hyperbolic and continue just to keep going up and just give a down candle and then keep buying after it. We may not get a higher swing low to buy into. But pay attention to what all the markets are doing because they're all correlated together. They're not just a moving piece by itself. They move in alliance with each other. One goes up, the other goes down. One goes down, the other goes up. And if they ever go against their code, we know there's something happening in the market. There's heavy manipulation going on because they're not following market code and the market makers have their hand over a certain asset class or a certain commodity or a certain pair or a certain cryptocurrency and they're manipulating it, holding it, pumping in orders to hold it in a certain place so that some other currencies or other assets or commodities can either rally or fall. I know it's a lot, but as you start to progress in your trading journey, you will start to understand these concepts slowly but surely. Take it slow, understand, and show up. Show up to all the videos, show up to all the daily updates. You'll see how we are tracking the price action on a day-to-day basis and what we're speculating. It's very simple ideas. You got to break down all the complex structures first, right? All the larger structures. Let me take that back. Not the complex structures. The larger things that we're seeing in price, we need to break down. I'm not sure where, oh, EU. I'm like, where's my annotations at? It's not EU. We need to break down all the larger portions that we see. We need to break down what trend is. And after that, once we figure out trend, then we could jump down and analyze the lower time frames for those entries. Those are more abstract ideas, the things that get a lot of people confused. Where my entry should be. Should we be buying below 7 a.m. or above 7 a.m.? Should we be buying below 2 a.m. or above 2 a.m.? Those are a little more abstract. And as you start to get more information and you get more experience with it, it's going to be like cake. It's going to be like cake. Hopefully you found this insightful. I'm still looking for price to probably target now this swing high here. Got this one here. It's not an IPTA level, but it's still a swing high. There's buy side there. Market likes to target buy side liquidity pools and create buy side liquidity pools. Price is going to most likely get there. Got so close to it. Really close. So I wouldn't be surprised in the next 5 hours if we get a small push up there and price is still pushing for 40-day look back at the high. Peace.